The US dollar hasn't won, commodities haven't lost, Wall Street is pausing the game, and crypto, well, it still hasn't found its momentum. Welcome back, everyone. That quote right there, it perfectly captures the absolute tug of war we've been watching this past week. The entire market is basically holding its breath, waiting for a massive catalyst. So, welcome to this week's Market Explainer. We have a ton of data to process today. Market dynamics are shifting at lightning speed, and if you're trying to find some clarity amidst a forest of noise, you are exactly in the right place. Let's peel back the layers of this big picture together. Here is our roadmap for today. We'll be looking at the strength of the dollar, commodities under pressure, the big reversal in US stocks, crypto's lack of momentum, and finally, the key variables you need to watch next week. Let's kick things off with part 1, the sheer strength of the US dollar. The dollar is absolutely the main character right now. Everyone's eyes are glued to the recent US PCE data, that's the Fed's preferred measure of inflation, and it came in hotter than last month. So what does this actually mean? It cements the view that the Fed is going to maintain a very hawkish, aggressive stance. Honestly, investors are even whispering about pricing in another rate hike. And you know the rule, when the Fed is tough, the dollar is king. The DXY index is holding incredibly strong at 101.366, but earlier in the week, it spiked to a one-year high of 101.8. As soon as it pulled back to the 101 level, bam, massive bottom fishing support stepped right in. The bullish structure here is completely intact.
And you can really see the fallout of this with the yen. The widening policy gap between a hawkish US and a dovish Japan is sending absolute shockwaves through the USD-JPY pair. Just look at the extreme volatility. The exchange rate is violently swinging between 161 and 162. The market is completely on edge, basically terrified that the Bank of Japan might step in to intervene at any second.
Actually, because of that insane volatility, I have a very serious warning for you. Heavily restrict your short-term trading on Japanese yen pairs right now. Unless you have an iron stomach, just step back. Those abnormal, erratic wicks will literally wipe out stop losses and destroy prior technical structures before you can even blink.
Moving on to part 2, commodities taking the heat. Negative 12%. Take a second to process that. This isn't just a standard market correction. This is the absolute evaporation of value in the oil markets over just one single week, a true freefall. The plunge in WTI and Brent crude is fierce and completely parallel. WTI plummeted all the way down to $70 a barrel, while Brent retreated to around 73. The direct catalyst here? Cooling geopolitical tension in the Middle East, thanks to some positive negotiation signals between the US and Iran. But here's why this matters to you. An overextended drop like this actually opens up a really interesting opportunity. The selling pressure is starting to show major signs of exhaustion. Heading into next week, we could be looking at a fantastic window to catch a bounce. Remember, geopolitical risks never truly vanish, and the OPEC Plus alliance definitely won't just sit on their hands if prices drop too deep.
Now, it wasn't just oil. Gold triggered some sheer panic for investors this week too. Early on, gold evaporated by 6.1%, dropping vertically down to the $3,960 per ounce zone, before managing a modest 3.4% recovery to close near $4,090. But listen, even with that little bounce, the structural risk is glaring. You need to be incredibly cautious of a sudden gap down, a sharp price void, the moment markets open early next week.
Let's pivot to part 3, US stocks reversing course. We are officially stepping into Wall Street's crucible. That era of easy money where you could buy blindfolded and win? Yeah, that is officially closed. The Dow Jones is the clearest proof of this reversal. Its attempt to establish a new peak at 52,700 points on Thursday night was brutally rejected. Even though it was pumped up 2.7% at one point, the very moment it tapped that massive resistance, smart money dumped their shares and forced an immediate retreat. That rejection triggered a ruthless wave of selling. The NASDAQ 100, which holds all the top tech heavyweights, suffered a massive 5.7% drop, and even the broader S&P 500 couldn't escape the gloom, shedding 3% of its value. The most crucial takeaway here isn't just the numbers though, it's the structural shift on the higher timeframes. The trend has officially flipped to bearish. If you're still holding out hope to catch a falling knife and go long on these indices, my advice is to keep it extremely short term right at the start of the week. Because the bears' next ultimate target, they want to drag the NASDAQ 100 all the way down to the 28,300 level. Please, exercise extreme caution out there. All right, part 4, crypto lacking momentum. So what is going on with crypto? Well, amidst all these violent swings in equities and commodities, digital assets are completely frozen. They are desperately lacking any real catalyst. The king of crypto, Bitcoin, is stuck hovering right around the $60,000 zone. And let's not forget, this price means Bitcoin has been chopped in half from its glorious peak last year. Why? It's pretty simple. The absolute dominance of the US dollar, combined with big capital preferring to hide out in US stocks, even during a downturn, rather than rolling the dice on high-risk assets like crypto right now. While we are seeing a little bit of buying effort at major support zones, it is incredibly weak. The bulls haven't completely given up, but they just don't have the ammunition. Based on the current structure, the best case scenario, the absolute maximum expectation right now, is Bitcoin managing to stretch up to $62,000. But the moment it hits that ceiling, a much heavier sell-off is highly likely to strike. Finally, part 5, the variables to watch next week. We've covered the whole macro picture, from Forex and commodities to stocks and crypto. So what exactly do we need to focus on next week to avoid getting blindsided? There are 3 core catalysts you absolutely must put on your calendar. First, the US Nonfarm Payrolls report. Second, the PMI data. And third, forward-looking speeches from central bank officials. These are the 3 master keys. They are going to decide the fate of every single asset class we just analyzed. All of this incoming data boils down to one massive ultimate question. Will the US dollar continue to defend its throne and crush the rest of the financial world? Or are we about to witness the start of a sweeping market reversal? The answer arrives next week, and those who are best prepared will be the ones coming out on top. Keep a cool head, stick to a sharp strategy, and we'll see how the dominoes fall.